Our fear, greed and hope survey found 64% of us think the stocks go up over the next 12 months. Afterpay lost 7% yesterday. Is this the start of something bad? And will AMP be broken up? And is it a buy? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Our greed, hope and whatever it was survey found that 64% of us think that the stock market goes up over the next 12 months. Are they right?
Look, I think they probably are, Peter. I have to laugh because every week we do this and you are required to wait for 5 seconds. Every week you get it wrong. I won't go there. I wasn't going to be nasty.
I'm too enthusiastic.
You are so enthusiastic.
I'm so mad about money.
Yeah,
I can't wait.
I'm surprised it's not more than 64%, but look, that's pretty strong. And I guess if we're following the US, I mean, the best August for 20, 30 years in the US.
30 years, yeah.
Coming into September, which is normally the really dicky month in the US stock markets, that's traditionally the worst performing month in the market.
Yeah.
Started off with a bang. So if the Yanks want to keep buying it, I mean, our market's going to keep going up. There is so much money around. I guess when term deposit rates, I think people have forgotten, they've actually come down a lot more in the last couple of months. The yield curve, this Reserve Bank at 0.25% is slowly bringing all the rates down. Yesterday, the Reserve Bank announced even more money available to the banks to borrow
Let's hope they lend
at
it.
0.25%.
Right.
But what it does mean is they won't need to pay as much for their retail funds. So all this money's got to find a home somewhere, and I guess that's why 64% are saying it's going to go back into stocks.
Right. Two things. The first year after a presidential survey is historically the worst for the US stock market, but, and I think we should throw this in, but if a vaccine comes, 2020 will be, 21 will be fantastic for stocks. If the vaccine doesn't show up and isn't as good, that's when the 64% could be wrong.
Well, that might be the irony, Peter. The US market could actually peak this year, which I guess you wouldn't have said that 2 months ago, 3 months ago, right?
No, exactly right.
But they're going to we're going to go through some electoral cycle in the US. I think that's going to be a negative. But look, at the moment, it's buy over there, and I guess we're going to follow. And I'm not sure why we came off as much as we did yesterday, but. I'm not surprised people are as confident.
Well, one of the reasons, the bell hasn't rung, the bell ringer's just forgotten all about it, but one of the reasons he went down yesterday was Afterpay, and now a significant company in the ASX 200 was down 7% yesterday. Tell us why.
Well, it's really, this is about PayPal in the US sort of getting into the whole buy now, pay later movement. This is not new business, right? I mean, anyone else, this is what I always said about Afterpay, and I have to admit, folks, I've been wrong about Afterpay. They've done a spectacularly good job. I've been bearish on them for the last $20 or $30. I've been wrong. One day I'll be right, I know. But look, the biggest issue with Afterpay is that most of the money comes from a margin of about 4% on average with the merchants. That margin is always going to be vulnerable to someone else coming in. Now, where Afterpay's done a really great job is A, getting the retail customers signed up, and B, getting into the merchants. Now, that's really hard work to get on the merchants. Now, this is where PayPal comes in the US, because Afterpay needs to grow internationally. The US is its big new market. It's done what it can in Australia. And if PayPal gets on the scene and says, we can do, there's nothing particularly intrinsically brilliant about being able to split a payment into 4 installments, right, or split a purchase.
And that's what PayPal's bigger in the US with small business, isn't it?
Yeah, so that's one of the reasons that they came back yesterday. This is probably the most overvalued tech company in the world, right? So it's always going to have blips down when there's competitors are taking action.
Yeah. It does show you that when you're investing in tech stocks, it's a gamble. Finally, Paul, this is another gamble. Is AMP a buy? Now they're telling us they might break the whole thing up.
Well, this is the predictable. We've had a change of chairman. We've had probably the CEO will go. He hasn't gone yet, but look, let's just see what happened. Yeah. Now AMP's come back to what always was going to happen. The company will be broken up. The news overnight is that AMP's appointed not one, but 2 investment banks to advise them on a portfolio review. Credit Suisse and Goldman Sachs. Why the hell you need 2 investment banks to advise you?
Don't leave anyone out. Don't make a mistake.
Plus lawyers as well. So AMP will be broken up. AMP Capital will probably be sold. AMP Bank will probably be sold. And they'll probably get left with the worst part of the business, which is the wealth business. AMP's always been worth more as a sum of the parts business.
Yeah, you've
AMP
always said that,
shares
you've
will
always said
go
that.
up as a result of this announcement. I think they went up yesterday. I think that news might have leaked a bit early yesterday.
Gee, I'd be surprised to hear that,
in a
Paul.
down market, AMP shares were up, I think, a couple of cents yesterday. So
Yeah.
query that one. But look, AMP's worth more than $1.50 as a sum of the parts business. It's not, as a going concern, it's worth very little. But they start selling off
And I
AMP
guess
capital.
if you're a shareholder and they start selling these off, the proceeds come back to the shareholders. And so the smarties will be adding up, what can these things be sold for? And if that $1.50 AMP share price is too low, up it goes.
This is always one of my problems with David Murray when he was chair and the CEO. I mean, I thought this was always the most logical thing to happen, unless they tried a really different strategy in the wealth business. They haven't done that. I could suggest one or two strategies they could try, but they haven't. So I always thought it was going to be broken up, and look, I think that's what's going to happen here.
And could IOOF buy the AMP wealth business?
I reckon you're a brave party backing IOOF, but look, good luck to them. I mean, it's a very courageous step, you've got to say. It's a huge discount. A lot of issues for small shareholders, the way the raising's been done, but to take on the NAB business, I mean, doesn't give me a lot of confidence, but let's give IOOF the benefit of the doubt and say, at least good luck to them. It's a big, big step that they're taking.
I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.
Shh.